Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for the segment, we have Bobby Zagotta, U.S. CEO of Bitstamp, to discuss how crypto companies will remain viable following the collapse of FTX. Bobby, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
What made the business practices at FTX so risky?
Well, there's a number of things. So, firstly, the cardinal rule: they did not protect customer funds. For an exchange or for any financial services company, that's got to be job one. But then, secondly, they had a really strong affiliation with a trading company. I remember when I first became aware of FTX, I didn't think it would get traction because people would see that there's an inherent conflict of interest when you are operating a trading company on the one hand and operating an exchange on the other hand. Exchanges have to be independent. They have to be market operators, and that's critical. And then the final point is, as everybody has discussed, is they were in a low regulatory oversight jurisdiction, which often leads to really bad management practices with what has been reported: no internal controls, no independent directors, lots of kind of interesting cultural phenomena going on. So basically, from start to finish, this is a risky enterprise.
Yeah, and Bobby, without sounding flippant here, why should investors trust Bitstamp if over-leveraging and borrowing appears to be an issue in the crypto space? We're continuing to see the fallout from this, and FTX is not the first firm to collapse this year.
Yeah, absolutely. And I think that's a valid question on the minds of lots of customers. Bitstamp and others like us in the space have a completely different approach. We like to say we invented the compliance forward crypto business model, right? We're the longest running exchange. We've been in business almost 12 years. We've got 50 plus regulatory licenses. And in contrast to some others, we embrace the regulatory aspect of it. And we run towards it and get licenses such as the Bit license in New York, which is viewed as a kind of a gold standard regime. Why do we do that? Not just because we love working with regulators. It's because we know it's necessary for long-term adoption and for broad-scale adoption. In order to give consumers confidence, you're going to have a really good, solid, complete regulatory regime. And then there's other things too. At Bitstamp, again, we're thinking, given our longevity, we're not thinking about the next bull run. We're thinking about the next 10 years. We're thinking about the next billion customers. So when you have that, kind of perspective in mind, you do build things the right way. So we have a Big Four global financial audit every year. We've been doing that for 6 years running. We have an independent board of directors for every one of our legal entities, with independent directors who bring tremendous value to the conversation, but also important checks and balances on what we're doing. And of course, we've got very meaningful internal controls, particularly around customer funds, so that no customers ever have to wonder what's going on with them.
And Bitstamp does not have a native exchange token. What's the significance of that?
Yeah, great question. No, we don't. And native exchange tokens are kind of an interesting phenomenon. I think they started as a loyalty program, kind of, and a means to reduce frictions for people operating within a particular ecosystem. But here's where it gets interesting: because it is a token, it can accrue value over time, and there can be a market for it. And when that happens, then guess what? The exchange operator gets into a conflict of interest situation. They issue the token, they control the supply of the token, so therefore they have levers into the value of it. They can incent people to use the token, and they can even create advantages for using the token on their platform. And when you kind of boil all of that together, you start to realize that the exchange operator, their primary focus is no longer operating a fair and transparent marketplace. Now they're actually trying to seed that marketplace and create different versions of value. In the FTX situation, this played out in just in a horrifying way, where they used that token to obscure, in my view anyway, how collateral in particular, but value in general, was moving between Alameda and FTX.
I also think, Bobby, that we're starting to see why longevity and experience is important to this industry, this mantra of, well, if you don't get it, then you don't get it. It's just not going to play out well anymore. I mean, you come from a traditional finance background at CME, so you have that experience and time in the industry. Tell me why that is so critical right now. And do you think the crypto space perhaps got ahead of itself?
Yeah, another great question. So I think that longevity really matters here. And it gets back to what I said earlier. In order for the crypto space and this ecosystem to really thrive and survive and play the important role that we think it should play in the world, we have to think beyond market cycles and market hype, right? So that's where this long view becomes more important. At Bitstamp, we've been through multiple cycles, so we're not like hiring thousands of people in one year and then laying off thousands of people in the next year. We're not sacrificing, for instance, the hard work of compliance, or putting off, I should say, the hard work of compliance. We're actually starting with that hard work before we get into trying to create markets and revenue for the company, et cetera. But the other thing I would say is it creates a level of credibility when you have some longevity behind you, because there's real know-how there. And I think Bitstamp and others in the space who have been around for a while can speak to regulators, we can speak to lawmakers, we can speak to customers, of course, and other constituents with a little bit different voice. This isn't something that came out, 2 years ago, bought a Super Bowl ad and named a stadium, and now we should all think it's safe and secure.
All right. We appreciate the insight, Bobby. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.